It's that time again. We should take a closer look at where commodities are at the moment. I'm being joined on the program by Ada Konobi. She is a senior investment officer with Financial Derivatives Company. Good morning to you, Ada. Thank you so much for coming on the program.
Good morning, Harriet.
So inflation numbers are out, of course. Food prices have actually contributed to the increase that we noticed recorded in the 16.5% rise for the month of June in terms of inflation. And as I said, food remains one of the major drivers.
Yes. Well, it's no surprise if you look at the inflation. If you look at the inflation figures, the food basket actually increased, the food sub index increased, and the core index increased as well. Food prices continue to trend higher due to the impact of the exchange rates pass-through on commodities, and as well seasonalities, the cost of transporting one good, the cost of transporting an item to another due to the increase in diesel prices, kerosene, and the 100% increase in the transportation cost as well. So that is one of the reasons why we're having an increase. I'm actually not surprised that inflation went to 16.8, but then I feel that it was a huge increase as opposed to what analysts anticipated.
But then imported foods continue to increase also at a faster pace. You know, one would have expected that we should cut back on eating all those imported products, but that's not what happened in the month of June. In particular, we also saw an increase in sugar, jam, honey, chocolate, and confectionery groups. Talk to us about the state of domestic sugar production.
Okay, well, like you rightfully said, imported inflation is still high, and sugar is a major commodity, even in the global market. If you look at sugar prices in the global market, it's gone up about 30% as opposed to what it was in the beginning of the year. And if you look at the Q1 2016 NBS report, it clearly stated that Nigeria actually is raw sugar cane is the fourth largest imports in the list of imported items. So we depend heavily on raw sugar cane, which the three major players in Nigeria, such as Dangote, BUA Group, and flour mills, they then convert that into refined sugar for domestic consumption. We are still lagging in that area. We produce about 70,000 tons of sugar when our consumption is about 1.3 metric tons. So you can see there's a huge gap. Although there have been some government incentives as to encouraging local manufacturing in the country, however, poor infrastructure still remains a problem. Limited access to finance still remains a problem. And you know, even if the private sector investments in the coming in to boost sugar production, the government still needs to make the environment somewhat conducive to attract a lot of investment in that region.
You remember that there's actually a sugar master plan that is in place, and the government has revised sugar tariff structure to boost, domestic raw sugar production. What impact has that had?
Well, the government has actually put in place some tariffs to improve local sugar production, and one is that there's a 0% levy on importing materials and machineries for local production, as well as some restructuring in the import duty and import levy as well. That should actually encourage more sugar production in Nigeria. But then, like I said, our production in 2015 was 75,000 tons. Our production in 2016 is 70,000 tons, and our consumption is about 1.3. So even if you have those government incentives in place, I don't see that having an immediate impact in bridging the gap between our local demand and local consumption. This is a long-term project, and we'll probably see the effect of this in 2020 or 2025.
Yeah, because some actually still expect that our level of consumption will still increase further by 2017.
Definitely, our level of consumption will increase further by 2017. And the National Sugar Association has said that Nigeria needs about $1.23 billion to actually meet up about 75% of our total sugar production by 2020. So there's a huge, it has to be looked into, not just revising the tariffs, but we have to encourage a lot of investment. And there's some core states in Nigeria that are major regions for producing sugar: Taraba, Kogi State, and we have the capacity to produce, and we even have the capacity to export as well. It's just that we need more government involvement in this.
Now, this has also continued to affect the price of fast-moving consumer goods, which actually base most of their products using sugar.
Yes. Well, like I said earlier, now we have the floating naira, and in the global market, sugar prices are 30% higher. So you can see that that's like a double negative impact on sugar generally. So if you have to source the dollar at a more expensive rate, coupled with the fact that in the global market, sugar prices are higher, you know, that tends to feed into the price of most price of refined sugar in the country, and that will literally have to affect demand, because you can see consumer resistance is beginning to kick in. Because if the prices are too high, consumers will not want to buy that anymore, because there's no increase in disposable income anyway. But then sadly, there's really no substitutes, so consumers cannot substitute sugar. Sugar is used in the production of a lot of FMCG companies use sugar, and at the end of the day, it would get to affect their top line, and you know, their revenues and even
bakers as well.
Yeah, bakers, confectionaries, carbonated drinks, juice, biscuits, bread, all over. So yes, so the exchange rate pass through will somewhat affect the price of sugar.
Okay, so we have current price of sugar at 10,600 naira here in Lagos, and in Onitsha is 10,850, and in Kano 11,000 naira. In the short term, what's your expectation for this industry if we're seeing prices of this commodity where they are and the industry still seeming to be constrained?
In the short term, I expect sugar prices to still trend at its current level. And again, most FMCG companies had, prior to the new flexible exchange rate, they already had about 30% access to the official market, and about 70% they had to source for the remaining at the parallel market. But now with this, you know, flexibility in rate and accessibility, and the panic reducing, I expect most FMCG companies to source the dollar at a rate better than it was before, because you get to see that the parallel market will begin to converge, although it's about 370 as it is, and the interbank market is about 290. But then if we have this floating naira in place, we'd see some sort of convergence in the interbank market and the official market, and the break-even could be about 300 naira to a dollar. So it will not have a significant impact on prices. So I expect prices to still trade as it is.
All right, Ada, thank you so much for coming on the program this morning and sharing that perspectives with us.